And welcome to the VSA Capital Tech and Transitional Energy podcast. It's Thursday, the 16th of February. And I think it's going to be a pretty short podcast, actually. This could be one of our shortest, 10, 15 minutes, because actually, talking of short, Phil, are you pleased that Nicola Sturgeon has resigned?
What an interesting question. I was brought up in Scotland. Yeah, it's a mixed one. That I want to see who replaces her, actually, because there's interesting time for Scotland, to say the least. I mean, she's been there for 8 years, so let's see if there are any kind of changes of direction and what happens there.
I think Boris Johnson should put on a kilt, get a Scottish accent, and stand for the get independence done.
Yeah, I wouldn't put it past him. Yes.
Sorry, this has got nothing to do with tech and trans. I do apologise. Let's move swiftly on.
I think so.
Anyway, look, I'm back from my work trip. Sorry, I nearly got that wrong, didn't I? In South Africa, we did a lot of work down there. No, we didn't. It's the mining in Darwin. It's just one big piss up, frankly. Let's be honest. But it's a lot of fun. I did do quite a lot of charity work with the Kusasa project, which is worthwhile. I also met an incredibly interesting chili oil company called Banhock Chili Oil. So that goes into the brand section in a way, based in Stellenbosch. They will, I think, become the Tabasco chili oil. If you're interested, do let me know. I can tell you a hell of a lot more. I'm not going to bore you all on this podcast, though. They are raising a bit of EIS money at the moment, which is always good because you can lose half your money and you haven't lost anything. So anyway, how are you, Phil?
Very well, thank you, Andrew. And very nice to have you back on the podcast.
Yeah, and actually, I can tell you you're busy because you've got a load of stuff you should be getting on with. You can't discuss because we're not allowed to talk about research that's coming up because it's inside information, effectively. But you are very busy, I know, because I'm setting you all this work. It's your homework, so to speak. Anyway, why don't we start? I tell you what I thought would be interesting to start with, maybe. Actually, there's 2 things. Actually, there's 3 things I'll mention on this podcast just to get things going. The first is I had a very amusing conversation down in South Africa where I was discussing with somebody how I will be talking to my grandchildren. They will be saying to me, "Granddad, what was that clunky crowdfunding platform you used to use called the stock market?" Which really was, and I thought that concept sums everything up. Our stock market is just so out of date, really, with the technology world. People today, they just want to trade on their mobile phones and they don't want all of this blooming hassle with the stock market and all the bloody stuff that goes with it. The world needs to move on. Anyway, that's just one little thought. The second little thought I have that's been buzzing around with me, there's a lot of talk at the moment about AI and automation and how possibly that could take a lot of jobs away. Actually, it tends not to. And whenever you have revolutionary changes like that, strangely, more jobs get created elsewhere. It's a change of jobs. But for what it's worth, there is a lot of chatter about that. I personally believe in it all strongly. I own the Sanlam AI fund and I own the iShares Automation and Robotics fund. And that's how I personally play that. And I think it's a really good place to have your money longer term. And then the third little theme that obviously is whizzing around a lot at the moment. Actually, I might ask you to talk it because people get bored of me talking about it. But it's interesting that the Americans, this whole Inflation Reduction Act, I mean, real money is starting to pour now, isn't it, into the whole sort of renewable energy, long duration energy storage, battery, EV market, Phil, isn't it? I mean, we're seeing literally huge news items every day, aren't we?
It's astonishing. I mean, it's a complete structural move by the US as a nation. And it reminds me of I'm old enough to remember when the MITI in Japan, the Ministry of Technology, focused investment on microprocessor technology because it believed at the time it was not advanced and it was losing out to other nations on it. And that's what this is like. It's such a fundamental move. And I was just reading this morning about a company called Redwood Materials, who are getting a $2 billion loan from the Department of Energy for a closed-loop lithium-ion anode and cathode material production plant in Nevada for recycling materials. I mean, that's a huge loan for a new, for a completely new plant. So that the states can recycle materials. I mean, seeing these kind of moves happening shows that there's very serious intent. There was also, Andrew, there was a confirmation of rules last night on the EV charging network in the states, and that's the new requirement there is that chargers are to be built in the United States, and that 55% of their cost will come from US made components by 2024. That is next year. 55% of the content there. So these are quite big moves that are happening.
They are big, and I think I may have said this before, but I'll repeat it anyway. Is that, in my view, the transitional energy boom and crash that we've seen in the stock market, because we have in truth, is just like the dot-com boom and crash. Everybody got very excited a few years ago. Share prices went shooting up. It didn't happen in 6 months. It never does happen in 6 months. They all came crashing back down again. But just like in the dot-com boom and crash, stocks like Apple and Google and Tesla and Facebook and all, the FANGs, should we say, did all go on to be phenomenally successful companies and make people an absolute fortune. And I think we are seeing now that same sort of pattern in the transitional energy world. The winners that come out of it will go on over the next 10 to 20 years to make people an absolute fortune. You've obviously got to pick the winners.
That's absolutely correct, and we hope to keep everyone updated on how we're seeing things there. I mean, and also something you've discussed, Andrew, is the nature of government involvement in making this happen, and you're just seeing that so clearly illustrated in the in the States now is like making things really happen. But I don't, coming back to the UK though. And real money coming into the sector was announcement from Zenobē, who are private, and they have their own fleet of battery storage, and they secured £235 million in the long-term debt facility structured by NatWest, with financing coming from Canadian Imperial Bank, Rabobank, Santander, Siemens Financial Services, and others, and that's to fund grid-scale transmission connected battery storage assets in the UK for 400 megawatts and 800 megawatt hours. So quite a serious project there. And that's the batteries. But oddly enough, the batteries are going into Scotland, is where they will be located.
Scotland's becoming quite a hub for the battery world, isn't it? That's interesting. That might have to do another trip up to Scotland. I keep saying I'd quite like to go up there. Anyway, right, that's pretty enough of an intro. I mean, there haven't been too many figures in general, actually, in the last week across the entire market, but I've hardly seen anything in the tech and trans space. Have you got anything, Phil?
I mean, just quickly on this is a client of ours. We discussed this as Equipmake. The ticker's Equip. It's listed on Aquis, 60 million market cap. Recently raised £6 million. We are advisor to the company. They produce electric vehicle, it's EV motors and inverter technology, also full systems that are retrofitted into buses. And so they just, on their interims highlights, they said they're on track to meet market expectations, which is a good thing. They've got a contracted order book of £9 million, so that's very positive. And they said that commercial production contracts represent 96% of revenues for the half. So that's all pretty positive news from Equipmake. But
well, whilst you're on that, also it's nice to see that also the price is just ticking up nicely. Actually, it's now 7p today.
Yeah.
Obviously, we did that placing a month ago at 5p. So yeah, people getting a nice return there.
Yeah, excellent.
But plenty more upside to go. I mean, we do think this space, and it's very much, I'd say, the space is very hot at the moment. Companies are getting taken over on massive valuations. Please don't necessarily connect the two together, but it is a very hot space.
Yeah, it is. It is exciting. And going on to the tech sector. There's new. This was bloody interesting. I thought is Cisco. CSCO, multinational, New York listed. But Cisco supply all of the, sort of plumbing for the internet that sits in the networks and in data centers to enable, high-speed data transmissions. So it's network infrastructure is the sector, and they raised their full-year earnings forecasts with a strong set of second quarter results. And they said that they've benefited from an easing of pandemic-driven supply chain constraints. So Cisco is a big buyer of semiconductors and electronics components that go in its routers and switches. So it's seeing an easing of the supply situation. I think they've also said that they are upgrading their expectations on revenues and earnings. And what was kind of, why is that all sort of eye-catching? Well, we've seen nothing but, we've seen some pretty bad news on, the equipment providers into the cloud services space as a whole and data centers, for servers and the PC market's all been soft. And we've seen a number of sort of FANGs comment on softness in cloud services, cloud related revenues. So that was quite positive to see, this theme of capital spend, which you and I follow. So I thought that was interesting. And another one we didn't really talk enough about last week, and they come out the week before, was ARM. Results from ARM. They'd announced their Q3 results to the end of December. And they'd seen a 28% increase in revenues to $746 million, and what a profitable business this is. The profit of $450 million. Particularly seen licensing revenues increasing by 65%, $300 million. I thought that was, again, quite, in terms of the sector, pretty positive, because these are big commits from their customers when they're, spending on licenses, the long-term agreements, and they had strategic long-term agreements with 4 key customers. But also their royalties were up by 16%. So on every time a chip ships with ARM tech, there's a royalty. And they were saying, stronger demand from data centers, IoT, and automobiles, next generation consumers. So there you go. And on the stock market theme, and on the IPO, Andrew, which has been, the ARM potential IPO, which has been discussed a lot. There's been quite a few articles on the fact that the FCA in particular is looking at reporting rules. The Times cited an article that ARM was concerned with some of the regulatory requirements of London Stock Exchange, specifically the rule that forced the company to report on any dealings with ARM's parent company, SoftBank. So that's being reviewed, and obviously a lot of the UK is desperately keen to get that IPO.
It would be great to do it, and of course, I actually did the initial IPO in London when I was working at Hawkerbet. And so, if they want to come and talk to me, I'm happy to do it a second time. Do you know what? I'll even do it on the Aquis market for them, which would be fantastic. Somehow I don't think it's going to happen, but it would be fun, wouldn't it?
Yeah, it certainly would. And I used to write research on them, so I'd be delighted to do that again. There we go, Andrew. I guess a bit of a final one on tech for me. And again, this is related to the UK stock markets. Cape Technologies, the ticker is Cape. Cybersecurity company. They've article in there've been RNSs this week about this, and from the Financial Times is that Cape is considering leaving the UK stock exchange. It's received a 1.25 billion pound takeover offer from its majority owner, the Israeli billionaire Teddy Sagi, and they quote him as saying he was a founder of Playtech. But he blamed thin stock market trading in Cape shares, and it's listed on, Cape is listed on AIM. The offer is for 285p, gives that valuation 1.25 billion. And Cape rejected a 265p offer prior to Christmas. So the company's put out a statement on this, and it's said, after consultation with shareholders, independent directors will write to Cape shareholders with their views on the offer in due course. In the meantime, shareholders are urged to take no action. So yes, it's another big tech company, and hopefully doesn't leave the stock market, but we'll see.
I think the shareholders are squeezing the pips, get the max, and then they'll say bye-bye. Anyway, there you go. Right, that's about it, isn't it, Phil?
I think it is, Andrew. Yes.
You know what? Some listeners may be very relieved. We've done that in 15 minutes. but we're not going to talk rubbish just for the sake of it. We'll be back again, obviously, next week. Anybody's got anything they want us to discuss, please do let us know. Any comments, let us know, all that sort of stuff. And enjoy the weekend. Thanks, Phil.
Yeah, that's super. Look forward to chatting next week.